This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with this Monday guest, Taylor. How you doing, buddy?
I'm doing great. Always a pleasure having me.
Yeah, one of the things I want to get viewers to understand that I think is coming, we actually had our first example of it last week. Actually, we had two, one positive, one negative. We'll talk about both, is what's called a pre-announcement. Yep. Right. As we both, and this is now public markets, the public companies get basically a report card every 90 days. This is how we did. And usually in that report card, they talk about the next quarter, right? It's called their forecast. Not all companies do, but most do. And when a company has to come out like Snap or like JetBlue or like Southwest, and in 30 days, basically say our forecast was so wrong, good or bad, that is game changing. That doesn't happen a lot, but it does happen at economic inflection points. And I think we both think the economy is weak and possibly getting weaker. So I think it was last week I called pre-announcement season starting.
You did. You hit the nail on the head way ahead of time. I'm like, oh, I sent you an email
right away when
I saw Snap. I said, holy smokes, spot on, nicely done.
Yeah. So I think pre-announcement season is coming. I think we're going to be surprised at the number. We're going to be surprised at the sector because there's company risk, sector risk, and then market risk. I think it's a chance that we have pre-announcements across the board. Snap was an example, obviously, of company risk, 48% down in a day. Ouch. It took Meta and Twitter and others with it, sector. But let's talk about pre-announcements. Do you see it coming, or do you think Snap was a one-off?
So I don't know that we get this massive widespread, but I think that, to your point, when you're at a point of economic inflection, surprises come. And surprises come where folks have thought, looking backwards, i.e. Snap, Evan Spiegel, the CEO of Snap, they put out their projections. And all of a sudden, within 30 days, it's like, how did you get it that wrong? And that meaningfully wrong, where your stock price literally got cut in half.
Yeah.
And so that's a very short period of time where someone comes to some realization that, oh boy, we need to announce this now, because if we wait 90 days to do this, we might be down 3/4. We might be down 70% as opposed to 48% or whatever it was. And so they come in midway through and say, hey, hands up, we were wrong. We're sorry. Crush us in the market now because we don't want it worse another 60 days from now. But I don't know that, again, I think this kind of goes back to inflation, which we've talked a lot about. I think inflation is lightening a little bit. So I think that with that inflation lightening, that takes off the table this massive end consumer not being able to spend in like some dramatic draconian way. Now, if you're right and inflation continues to tick up from here and moves from 8.3 to 8.5 to 8.7 or whatever it may be, then pre-announcements are coming. I agree, because that's the scenario where the end consumer, whose wallets are feeling very thin right now, have that stark realization that, oh boy, this isn't getting better anytime soon. And that's when they pull back on the spending in a more meaningful way than they already have.
Yeah, pre-announcements are never good, right? Because again, they happen in, like, you have a 90-day window, and again, you had a 30 days of actual performance, and Snap had to come out and say, we were wrong. Whoops. So let's talk about sectors, because I think there are some sectors that lean towards a negative surprise. And actually, we'll talk about a positive surprise because we have two examples of those in a minute. But I think you start with retailers, right? I think Walmart and Target are great examples. If you are going after that segment of the economy, and oh, by the way, you have inventory bloated, I think both of them were over 40%, you may have to slash prices, truly deflationary, and give stuff away. But that's a direct hit to margin. I mean, that could be a problem.
I don't think there's any way of them avoiding that. Target came out. Target was a weird earnings report where, and we talked a little bit about this last week, where they said the strength of the consumer was there, and the strength of the consumer was there, and the strength of the consumer was there. And yet the numbers looked god awful.
Yeah.
Awful.
Where are you looking?
Right. Maybe there's people walking in your stores, but they're not buying certainly what's on the shelves. And what was happening was they were moving away from the discretionary items towards more of the staples. Yeah. And Walmart said the same thing. People aren't buying bicycles like they were a year ago with the stimulus checks. Instead, they're trading down for the cheaper grocery. Yeah. Like That's a different situation. And then when you look at it and say, they then say, okay, we got the consumer wrong. And essentially what they're saying there, in my eyes, is that we got the consumer wrong, saying that we thought the consumer was still strong and now it's not. How do they not come out and slash prices? I think it's almost inevitable for them to come out and have to break down prices on the more discretionary type things, things like televisions, bicycles, basketball hoops, etc., the non-essential things. And to your point, that hits profit margins, and that could be something where they come out and pre-announce. I don't think you're going to see it in those biggies, but
no,
it's not to say Snap. Yeah, it's not to say Snap's a small company though. Like. It's interesting. It's really crazy, in my opinion, how they got that so wrong so quickly.
Yeah. The other one, again, other sectors, I think you could have it. We talked about Toll Brothers, I think, in video number 1. I think the luxury is going to be fine, but KB Homes, they don't play in luxury, right? They're definitely first-time home buyer stuff. And we've already seen, 30-year mortgage rates at 6%. We're seeing people not qualified. I mean, we could see, I think anybody who focuses on that part of the consumer segment is ripe for a sudden surprise.
Yeah. And so you're the expert here, so I'll definitely defer to you on this, but what is the state of the housing market right now from a real high level? Is it so undersupplied that the demand needs to be met and can take higher interest rates, or is it not? Is it interest rates have now doubled and people just can't, and they can't afford it?
Yeah, I think the Fed broke housing. Kind of say this quickly. I think the Fed broke housing. It's a really weird time. I think we're going to do a lot less transactions. It's going to shock people how fewer transactions we do. However, median home price will actually go up, and it's more of a mathematical oddity.
Am I putting words in your mouth, or did you say transactions will be down 25%?
25% this year, 50% peak to trough.
Interesting. Yeah. But to your point, because the supply is so low that median home prices will continue to
because Toll Brothers doing good, KB Homes not. And it's an oddity, right? We're losing so much of the front end. It is truly happening. The first-time home buyer, we probably lost half of them, and maybe 40% that could qualify at 3 or 3.5. They don't qualify at 6. We are having true demand destruction on the low end. We are also having supply destruction because people don't want to move. The housing market is flipping broken right now.
Yeah, Redfin reported, and don't quote me exactly on this, it was in the 40s, but year over year from last year, the average mortgage increase was in the 40s. I want to say it was 43%, which is just wacky. Astronomical movement in 12 months.
Yeah, and most of that's in the last 100 days, right? So again, I think,
because that's when the big movement in rates has come, right?
Exactly. So I think housing is broken. I think the low end. The other thing I think is going to happen that could have these pre-announcements, like car manufacturers. How many people went out and bought their new car? Cars usually last 6 to 8 years. How much demand did we truly pull forward?
So I'll take the other side on that one. The car market is still so used cars have rolled over, prices have come off still. New cars, because of the chip shortage, the new car lots, like I have a couple friends that are car dealers, and now granted it's anecdotal because you're only getting it from a few of them, but I think there's 3 or 4 of them that I know, and they still have every new car coming in already sold.
Nice. Okay.
So it's a little tricky there, but again, I think that goes back to the chip shortage, and they also have learned and I don't think that they got punished, but they learned a lesson, or they changed a business model during COVID, and their lots, they think perpetually moving forward will not be full like they were before. They will not hold the inventory they held at the car lot level. Yeah,
they've realized they don't have to.
Yeah, they don't. Exactly right. They don't. And they don't need as many employees. That's the other thing.
Exactly.
They said to the T, the group of them that I speak with, they will pay their employees more. Their good salespeople will get paid more, but they will have less of them.
Well, that's why I think wage inflation, back to that conversation you were talking about, Apple's and Microsoft and FANGs paying, others not. I think that's what happens at mid-market. We close recs, and those dollars that were allocated to new employees, we pay others more. I think that's why wage inflation takes off.
That could absolutely be true. And I think you know, I'm not telling you anything you don't know, but unemployment is the ultimate lagging indicator.
Correct.
So that tells you where we're coming from, right? So unemployment generally comes to its lowest point
at the start,
when the market's rolling over.
Agreed.
And so that's from an economic standpoint where I think we both agree that's the camp that we're likely looking at.
Yeah. And the other thing we just talk about as we wrap this episode up, pre-announcements can also be on the positive side. I don't know if you saw this, but Southwest and JetBlue Again,
Yep.
gave a forecast, gave numbers, and inside 30 days came out and actually said the reverse of Snap. We have seen
Yep.
such demand and higher prices. We have to raise guidance. So again, we can have positive surprises as
People
well.
can travel. Here we go.
Yay!
Go on vacation. You've been waiting for 3 years to go on, right? The thing that kind of, has me scratching the back of my head a little bit though, is that I just don't see for a forever. I don't see business travel going back to where it was.
No,
Doesn't make sense. We just got too good at doing what you and I are doing right now.
Yeah, as somebody did almost 1 million miles doing business travel, I can tell you it's never coming back the same way. I mean, I would jump on a plane to the East Coast for a 45-minute meeting. We'll never do that again. It'll never happen
and we're
again.
all better for it. Your family life is better for it. Your company's margin is better for it. Everyone's better for it besides for, the airlines, the hotels, the taxis that get you to and fro, et cetera. But at the end of the day, we all are like, yeah, that's cool. And it's not to say that face-to-face meetings are gone. Like there is something to that. I'm a proponent of that. I like the human interaction. But at the end of the day, to your point, that 45-minute meeting is not worth a 6-hour flight in both directions and an overnight stay.
No, it's just not going to happen. It just won't happen. So again, I think we're going into a pre-announcement season. I think many of them will be negative, but you can have some positive. We are seeing the economy change quickly. We are at an inflection point. I think we have the K-shaped summer where the top 30% are flexing their muscle, I lead JetBlue and Southwest, where the other 70% are unfortunately making some tough choices, a la Walmart and Target. So Taylor, where can people find you?
The one thing I'll add on that, and then I'll answer that question is like, guys, go back to the basics. The Fed puts us at inflection points. When they raise rates, when they cut rates, we're at an inflection point on both sides. This isn't rocket science. Like I hate to say it and diminish it down to that, but it is what it is. And the old market adage is don't fight the Fed. As the Fed's going higher, don't continue to fight it. But when the Fed pivots, this will be an interesting point. When the Fed pivots, that's when we could have actually seen a bottoming process and us coming back out of this bear market, whether you want to call it that or not.
And June 10th might be that day. Might be that
Could
day.
be. Not if you're right.
Yeah. Not if I'm right.
No,
So Taylor,
find us at Life Goal Investments. So thanks so much. On Instagram at Life Goal Investments. Michael, you're a pleasure to talk with.
All right, buddy.
Thank you so
Thanks
much.
again. We'll talk next week.
All right.